Psst, psst. Turn on the money printer. Imagine making $500 every single week without owning a rental property, without selling a course, and without working a second job, just by selling options on a few stocks that you already know and trust. No guessing, no gambling, just consistent cash flow. In this video, I'm going to walk you through exactly how I do it, and we're going to start off with a real trade that I did this week on Amazon. If you've ever wanted to turn your brokerage account into a money printing machine that prints out weekly paychecks, this is the strategy you got to listen to. Let's break it down. Here is the exact trade I just recently placed on Amazon. The put option that I sold is for the strike price of $212.50. The expiration for this put is going to be June 20th of this month. The premium that I collected is $1.68, which equals $168 because you have to multiply that number times 100 shares. So that's $168 per contract, and I sold 4 contracts. So that is a total of $672 in cash that I got paid up front, and I collected and basically put in my pocket. So as soon as you sell the contracts, you have that money as buying power instantly in your account. It goes directly into your buying power once the trade is executed. Okay, so let's be clear right now. I currently do not own those 400 shares of Amazon, but by selling these cash secured puts, I'm basically going to be obligated to purchase those shares if it goes below the strike price of $212.50. And if it stays above my strike price and I don't get assigned the shares, then I'm just going to keep the premium, put it in my pocket, and keep it moving. What was it that Drake said on that song?
Long as the outcome is income.
You heard it from the man. As long as the outcome is income, that's all I care about. As long as you're making money and you're not losing money, you're good to go. And if it goes below my strike price, I will be obligated to purchase the 400 shares of Amazon at the strike price that I selected. So I'm happy with that because for me, I'm still purchasing Amazon at a discount and I still get to keep the premium. Either way, I win. This strategy is called selling cash secured puts, and it's one of the most reliable ways to generate weekly income in the stock market. Each week I sell a few contracts, collecting the premium upfront just for the will to buy them at a lower discounted price. The key is simple. This is the key, guys. I choose a strike price below the current market price, a strike price that I feel comfortable owning the stock at. I only pick stocks that I love to own long-term, and I always have the cash set aside to buy the shares if I do get assigned. This isn't a guessing game. It's a system, and it works. So let's run some of the numbers. For Amazon, I sold 4 put option contracts, right? So I sold that for the strike price of $212.50, and I collected $168 for each contract. When you multiply that times 4, you get a total of $672. And then I did something similar with Apple. I also sold a covered call because I own 100 shares, right? When you sell a covered call, it means that you own the shares. When you sell a cash secured put, it means you have the money to buy 100 shares at the price that you set, the strike price. So not to get you confused, with Apple, I sold a covered call and I sold this at the price of $210. So this is going to expire in about 3 weeks on the 3rd of July of next month. And the premium collected was $1.09 for the contract. And I only sold 1 contract of that because right now I have 100 shares of Apple that were freed up. I have 200 shares that were already on the contract. I'll show you that before the video ends. So if you add up the premium collected this week for Amazon and Apple, those 2 plays alone, it's a total of $781. Now, last week, like I mentioned, I sold 2 covered calls on Apple for the strike price of $207, as you can see here. And I collected $2.43 per contract. So once again, that is $243, guys. You multiply that times 2. So you're going to get $486. Yeah, if my math is right. So $486 I collected on those contracts. And those 2 covered calls expire next week on June 20th. So some weeks are less, some weeks are more, but on average, I bring in a little more than $500 a week doing this strategy right here. So why am I selling options on these companies here primarily? Well, Amazon, do I even have to explain that, guys? Like Amazon, this is a conglomerate of a company. You've probably had an Amazon package delivered to your house within the last 5 days. Let's be real. So Amazon ain't going nowhere. If Amazon goes bankrupt and I lose all of my money, guess what? We have a lot bigger problems to worry about than the money I lost in Amazon. Because if Amazon goes bankrupt, there's a serious issue in the economy. And we're really going to be out there eating cats and dogs. All right. So Apple, I mean, come on, that's pretty self-explanatory. This is arguably the safest mega cap stock in the world. I mean, they have like a $3 trillion, $3.2 trillion market cap. They have a super loyal fan base. I mean, I buy their stuff all the time. I like it. It's pretty solid, guys. And I don't see them going anywhere either. That's another one that if they do go bankrupt, we're in trouble, guys. If Apple goes bankrupt and they collapse for whatever reason, that means the economy is in the gutter. And we have a lot more to worry about. So Amazon and Apple, I'm willing to bet my money on. I will hold those long term. And I could bet my bottom dollar on those two stocks. They're going to be around the next 15, 20 years. They're all high volume stocks with tight spreads. So they're perfect for option selling. That's one of the main reasons why I like these two stocks to sell options on. And they have weekly options. I mean, you can do this on a weekly basis. You can do this every single week, collect your premium and keep it moving. So they're super liquid, and that's another plus about them. So here is how you can get started with this strategy as soon as possible. First, you have to pick 1 to 3 stocks that you would love to own. Pick a handful of them, something that you would like to own for the long term that you don't mind holding if the next 5 years it's trading sideways. Then for each stock that you want to own to do this with, you got to have enough money to be able to purchase 100 shares at a time. So let's say this was a $50 stock. You would need to have $5,000 for each contract you'd have to sell for this stock. So if you wanted to sell 3 put options on a stock that was worth $50, let's say HIMS, for example, if you wanted to sell the 50 strike price on HIMS and you wanted to do 3 contracts, you would need to have $15,000 liquid cash in your account to be able to execute the contracts. So here's a quick example. When I just did my Amazon ones, right? I wanted to buy Amazon at $212.50. This is something that I feel comfortable with. Amazon was just at $242. This for me is a great discount. I do not mind owning it at this price level at all. So I chose to sell the put option at that strike price of $212.50. That means that I needed $21,250 per contract. I had to set aside $85,000 for that play in order to sell the 4 contracts. If I didn't have the $85,000 set aside and I only had $80,000, I would have to make this strike price a $200 strike price, because 200 times 100 is 20 grand. Times 4 contracts, that's $80,000 you have set aside. You would collect a lower premium and you would have a way less chance of getting assigned the shares, which is not what I want. I want a high chance of getting assigned. So, I mean, I still want to buy it for a discount, get it for a couple bucks cheaper, have a good chance of getting assigned the shares because I do want to own them. And then I can sell covered calls on them, continue to make premium on the shares. And eventually I could also make the appreciating side of the stock. So if the stock does appreciate and it goes from $212.50 to $222 and I get assigned selling a call at $222, I will make the difference of the stock appreciating plus all the premium I've collected in the meantime. Okay, so to not go too far down the rabbit hole here, once you do have the stocks in mind that you want to trade and that you don't mind holding long term and that you have enough money set aside for, you want to pick a strike price. Pick the strike price, pick the expiration date, and then collect your premium, pocket that premium. What I like to do is I use the premium to buy dividend stocks. I use the premium to do other calls on other stocks. So I'll buy, for example, a couple more shares of NVDA. I'll buy a couple more shares of Apple. I'll buy a couple more shares of Palantir. I will eventually add up to another 100 shares, sell a covered call on that stock. And it's all funded through the premium that you collect on a weekly basis. So these $500 that I get here, I put them in buying power. I'll put them into another stock. Once I get to 100 shares of that stock, I also deploy my own money in there on a monthly basis. Once I get to another 100 shares of that stock, I will sell a covered call on that stock, or I will save up enough cash in my account to purchase 100 shares of that stock, if that makes sense. And if you get assigned, once again, we will run what is called the wheel strategy, which is selling covered calls. I got a video for that in the future. Stay tuned. All right, so what are the risks? Because of course, everything has risks. I'm not gonna sit here and lie to you and say, hey, this is risk-free. It's not. Everything's got its risks. So, I mean, you could walk across the street right now and get hit by a car. Everything's risky, right? So if the stock crashes way below your strike price, you'll still have to buy it at the strike price that you chose. So with my instance with Amazon, if Amazon goes down to $195, I'm going to have to pay that guy or the bank or whoever I purchased that from. Whoever purchased that from me, because I sold the option, whoever bought that from me is going to dump those shares on me for $212.50. I will have to pay them. I'm obligated to pay them $212.50 per share, even though they're currently trading at $195. That is one risk that you're willing to run. And that's why it is very important that you guys pick shares of stocks that you enjoy holding for the long term. Don't pick a bunch of shares that are garbage that you're like, man, what am I doing with this? I want to dump this out of my portfolio. It's not going to work that way. Another key thing is obviously you need to have enough liquid cash in your account. That sometimes I understand if you only have like 20 or 30K, you can't really do a lot with this. If you got 100, 150K to play with, you could wiggle around a little more, do a couple different companies. But if you got a smaller account, let's say 20K, you got to kind of stick to the smaller stocks. Make sure that there's still, a growing business, something that's stable, something that's going to be good. You don't want to invest in Timmy's drones, for example, something that's going to go out of business. And I cannot beat on this dead horse enough, guys. Do not do this with garbage stocks or meme plays. Stick to quality stocks. If you do this with garbage stocks and a rug pull, something you got on Reddit on some article of some dude that put $50,000 into this stock that's going to go to the moon, and you get caught with your hand in the cookie jar and it collapses, that's on you, Playboy, not on me. This strategy is great, guys. This strategy works when you treat it like a business. If you treat this strategy like a business and not a lottery ticket, it will treat you accordingly. Okay, so that's all I got to say. All right, so a quick little recap. I sell cash secured puts on a handful of stocks that I do not mind holding for the long term. These are stocks that I don't care if I had to hold them for the next 5 years. And if I get assigned, I will own quality stocks that I believe in, and I'm basically getting paid to buy them for a discount. I am actually getting paid a profit, a premium to purchase stocks that I want to own anyway for a discount. So I'm buying them at a discount and I'm getting paid to buy them at a discount. Come on now. So if you guys want more videos just like this, where I walk you through my exact trades and show you how to build passive income with real strategies, smash that like button for me and subscribe to the channel. Drop me a comment down below and let me know if you see yourself doing this in the future. With that being said, guys, remember, when you invest wise, you can live free. Thank you guys for watching. I will catch you on the next one. Peace.